Hey, good afternoon, traders. This is Trader Tim from over at eminimind.com doing a Thursday trade recap video. Today's the 17th of September. The first thing I wanted to talk about is the daily chart. We're still kind of between these two 50s that neither which have traded. This is on the SPY, and I put on a hedge going into the Fed meeting announcement yesterday. I actually used the September contracts because I was planning to take them off today. Expiration is tomorrow, both for the options as well as the futures. Sometimes when we get into this futures rollover week, things can be hit or miss, but by and large, it was a decent week. I don't trade the Wednesday of the FOMC meeting announcement as far as day trading the ES goes. You have a couple of things going on here as far as the other top line figures go. The Dow has touched its short, hasn't made it down to its long yet. The Russell is pretty sloppy here. Kind of broke through its short. It hasn't come down to the long, and the Nasdaq is simply just hugging the halfway back long. So if we flip up to the SPX, basically a bear flag with this consolidation. If you want to draw a rectangle around it, anything outside of the highs and lows, I would even go so far as to draw the rectangle like this, because when you have these tails that stick above or below, and then we come back in, there's pretty weak as far as the light trade action that occurs down in that area. So if we go to the ES for today, really nice long halfway back here on the 5-minute. If you just take low to high of the day, pull back right to the 50% and traded right to the negative 23% target. Now if we zoom into the 512 tick chart, first thing we can do is draw the opposing short. We see that's broken, but the more important element on the 512 chart as far as entry goes is breaking a swing high and then just drawing up that first retracement that follows the 5-minute setup. So you draw the setup on the 5-minute chart, we pull back to that 50%, and then come in here to the 512. Once we touch the 50%, look for a move up, because this 50% retracement is a long. We break the swing high, and then low to high, pull back to the 50%. If you look at the distance between the 50 and the 61.8, a 33.45, put your stop at a 2-point stop, puts it at a 33.43, so that keeps it outside of the 61.8. If you did want to go a little bit smaller, you could even draw the next setup off of this 512 like this, and look at a 46.50 for an entry. And then from there, it's just a matter of trailing your stop, trailing the swing lows. You could also just trail the 61.8. Either one of those are fine, and that was good for 10 points on the micro. You would have had to put your order a little bit in front of the 5-minute price of the 50% in order to get filled, but then that one did go up to its negative 23. We did, I also want to mention, have a high ticket highs at, it was 711 here. Back here, high ticket highs, but we didn't break a swing low. So this was the prior swing low. We didn't really trade up into, we got close here to the halfway back short. Technically, we did come down and complete its target. Like I said, it got close, but that was really about it. There was no, second retracement that kept going. So no short entry. Actually, my anchor point should be more like this. So you can see there's a little bit more room between the high and the short 50%, but doesn't matter because we didn't come down and break the swing low. So wasn't really a short entry there, really just the long. was the only play for the day. I closed out those puts when we came down and made a double bottom. Being so close to expiration, the time decay, whatever's left of it, is going to erode pretty quick. So even though they were in the money, um, rather than waiting, a few more hours to the close, I figured, well, we came down to the low of the day. The volatility actually kicked up a little bit, and they had got inflated a good amount. So no harm in just closing it out, even though we did kind of retest it yet again later in the day. The downside of the options is that time decay will eat away at you. One last thing I wanted to point out is that the breadth today, not very bearish. The breadth on these bigger down days was not very bearish. So there's definitely buyers, people willing to buy in this area. And that's, does a lot for forcing the market to gap on, a lot of the days. And it's kind of contributing to keeping us in this range. So I expect this range to continue. If you want to draw a line around, kind of a line in the sand, just use the 60-1/8 of the long and the short as your kind of your breakout failure point, and then you can draw up. Let's say we break to the upside, then you could draw a retracement from lows to highs. If we break to the downside, either extend from the original anchor point lower, or take the swing high down to lows if we break the 60-1/8 short. So I hope everyone has a great rest of your day. Good luck trading tomorrow on Friday. Remember, it's expiration, so things can again kind of be hit or miss this week, especially a Friday of expiration. So no harm in taking it off if you've got some other fun things to do. And next week we'll be back at it. If you want to tune in to the live trading session, you can do that over at emoneymind.com/VIP. Thanks, and have a great weekend.